Welcome back to the Property Management Show, where we deep dive into the world of property management, marketing, and entrepreneurship. Your hosts are Marie Tepman and Brittany Jones from 4.5 Marketing Agency. Since 2012, 4.5 has helped hundreds of property managers grow their business by getting owner leads from marketing. Whether you need help with your website, SEO, online reputation, content marketing, advertising campaigns, social media, marketing plans, you name it, we can help you. Visit 4andhalf.com to get started on growth today. That's FOURANDHALF.com. Our guest today is Jordan Bennett, who is the Senior Director of Network Risk at Nacha and a former risk analyst at the Federal Reserve. Jordan, welcome back to the show.
Thank you. Glad to be here. Always love talking ACH.
I love it. And so to put this whole discussion into better context, can you briefly explain to our audience what your job entails?
So I work for Nacha, and we are the rulemaking body as well as a trade association. We have a number of roles here, and we're out promoting ACH. My job specifically is with risk management, thinking about how to prevent risk, how to keep people's money in their accounts, how to stop schemes, how to make payments safe, and to promote the use of ACH, which is one of your most safe payment methods out of all the choices you have in the United States. It's a really interesting job. I get to work with banks. I get to work with third parties, and just any use case with ACH, how it can be utilized and how we can do it a little bit better.
Thanks for the overview. And so what really made it interesting to interview you on this topic is you have this like bird's eye view, because you're able to kind of see online payments from kind of all angles, right? For the longest time, ACH has become popular mainly because it's always been free. And it's always been the free option versus like credit cards, which typically would charge a percent of the transaction, right, as a transaction fee. But now we're hearing some companies are beginning to charge transaction fees for processing ACH. And so given your kind of unique point of view in the ACH network, why do you think this shift is happening?
There has always been a cost to run an ACH idle. It's very low. We had as the ACH network, know that it is a low cost method, and it's a batch system. So it is, we don't run on interchange like the cards do. So there's going to be just a much lower cost to the financial institution and the property manager, but there are costs to run the network for all the parties, right? And so it makes sense that a property manager would want to recoup these, that a financial institution would want to recoup these costs. They've got to have the systems in place. There's a lot of anti-fraud tools that they're using. There's a lot of just infrastructure that they're maintaining. So, it's never been necessarily free, even though the customers often see it as free. There's a value there. And, we have to be very careful at Nacha when we talk about fees that, we don't suggest fees or discourage fees, because of antitrust laws. We can't be seen as colluding with an industry to charge something or not charge something. But, we can talk about the realities of what's happening on the ground, and that, it doesn't just automatically happen, right? People at these institutions, financial institutions, get paid to do their job and keep these payments safe.
And so when you and I were talking, before this interview, you sent me a message that a coworker of yours received from their property manager, basically saying like, hey, we're going to, transaction fees are going to start coming up for ACH payments, and the letter encouraged them to use checks if they want to avoid the payment. And Like, could this be setting a bad precedent?
Oh, I think so, right? It actually had two coworkers that sent that same letter, completely different states, right?
Mhm.
And, of course, working for Nacha, we're very pro ACH, but even as just a consumer who does not want my information out there and wants the convenience, why would you incentivize the use of a check? And even from the HOA's perspective, they're going to have to physically open up an envelope. They're going to have to process that, whether it means taking it down to a bank branch or, now with Check 21, you can snap a picture on your phone. That's pretty cool. But what does that take? A minute per check? Let's say you've got hundreds of checks coming in. You've got an FTE you're trying to pay. And the check fees are going to be higher, most likely from your bank, than an ACH transaction. Why on earth would you encourage checks? It for this application doesn't make any sense. When a check goes in, as a consumer, I know that I've got money in the account, but then sometimes I forget, and that check may take a few days through the mail to get to you as the HOA or the property owner. And if I've spent any money under what my rent is, or I have a balance below my rent, the whole thing could bounce because it either processes or doesn't process, right?
Mhm.
Unless I have overdraft protection on my account, and not all consumers do. So it's to me, a risk that landlords or property management companies are taking that is unnecessary, especially when you can set up an ACH to be a regular recurring payment. It comes out every month on the 1st or the 5th or whatever it is. The consumer can push it, or you can authorize it so you can debit that. You can have that control as the property manager. And yeah, it may take a few minutes to set up. Once it's set up, it's there. You don't ever have to redo it. It's not like that monthly check processing that you're doing every single month for however many days as those checks come in at the beginning of the month. Yeah, there may be a small fee for ACH, but what is your time? What is the fraud risk? What is the other types of risk that you're putting yourself into with handling physical checks? Is your employee a little bit disgruntled? They can't see ACH items, right? But if a check comes in, they've got a customer's routing and account number right there. Are they going to commit fraud? I hope that your employee wouldn't, but that's how check fraud starts. It's access often is one of the best predictors of whether somebody is going to do something or not. It's whether they can. But unfortunately.
Yeah. Yeah, that's actually a good segue to like the second part of our discussion, right? So you talked about risk, you talk about check fraud. What about online payment fraud? Like fraud has been present since the beginning of the financial service industry. Like why hasn't the industry eradicated fraudsters by now?
I can really speak from ACH, and we've done a really good job. I started out in my career about 20 years ago. And at the time, I didn't work for Nacha at the time. I worked for the Federal Reserve, and Nacha put out a framework for risk management. And it focused on debit fraud. That's where our problems were. We were having a rising rate of debit fraud, and that's where your fraudster gets the routing and account number, often from a paper check, and starts debiting somebody. Or it's like a gym that refuses to let your subscription go, right? They keep debiting you, even though you said, no, I don't want this. And so the rules were changed on the ACH network to get those guys off the network and to make sure banks were helping us. The banks could no longer say, well, I'm not responsible for my originators. The banks had to reduce return rates for their originators or face the consequences. If you had high return rates, if you had somebody who was debiting without authorization, we had a major problem. So we worked really hard to reduce that problem. Is it going to go away? it's never going to go away. You're always going to have debit fraud, but it is at a much lower level than it has been in the past. So where do criminals go? Somewhere else, right?
Mm-hmm.
So, oddly enough, they have really gone back to check fraud. That's where we're seeing in the industry a lot of fraud is through checks. So number one, don't use checks. If you can avoid it at all costs, stay away from checks. But number two, we squeeze on the balloon with debit fraud. They've moved over and we're doing something called credit push fraud now. They are conning businesses and consumers into sending them money. And it's inherently different, right? It's not getting my routing and account number and then creating a debit. It is somehow convincing an employee of 4.5, let's say, I call up Marie or I call up Brittany and I'm pretending to be a vendor. And I convince you to pay my invoice. Or I pretend to be an actual vendor. I know you guys do trade shows. Let's say your rent for the trade show that you're doing, those things run into the hundreds of thousands of dollars. Somebody will know that you're doing that. That's very, you're publishing that information. You're saying 4.5, we are having a trade show. It's going to be in Austin. It's going to be at this convention center. And a fraudster will call up and say, hey, I'm from the convention center. We've changed our routing and account number. I need you to pay it to this routing and account number. And so you change it in your system. And then when you get a real invoice from the convention center, you pay it, but it goes to the fraudster. That's a credit push fraud scheme. And 4.5 is out $100,000 or whatever it costs, right? To rent.
We've definitely gotten those phone calls before too. Mm-hmm. Like pretending to be a hotel too for bookings. Like it's so interesting. Wow.
Right?
Yeah.
And it relates not only, I used your company here because, we're on this podcast, but you can do it as a tenant or a landlord if you're in property management. And somebody knows that, if they knew that I was a large company and I was receiving all this rent, they could call up the property manager and say, we've changed, I'm the owner of said property and change my account routing number. So when all those tenants pay, it goes to the fraudster and not that landlord. That's a big issue. And that is something that should be preventable. Should be caught through something like dual controls. It really is education of proper procedures and proper policies that can help prevent these kind of things. We have our new framework for credit push fraud. It's out there on our website if you go to nacha.org. And, having awareness that these schemes are out there and that they're targeting everybody, one of the biggest ones that we've seen was for snow plowing removal. It happened to a city, but if you're in an apartment complex or an HOA, it could happen to you as well. Most of your vendors in a public setting are in a municipal setting, or that's public record, right? The fraudsters know who you're paying. That information may get out. I mean, somebody may see the vendor with their insignia on the side of a snowplow truck as they're pushing the snow out of your property, right? So it's not hard to find out who does business for somebody else. So if they call up your property management company and say, hey, I'm the snowplow vendor, go ahead and change, my routing and payment number, and your property management company does that, or in this case, it was a municipality. The municipality waited for the invoice out after a whole season of snow plowing, and it was something like $600,000 that was paid out to a fraudster as opposed to being paid out to the company. And the company's not out because they're not the one that called. It's either, if you're a property manager paying the wrong company, you're out that money, or your insurance, if you are insured. or the municipality. And there
So
are
what
ways to prevent it,
recourse?
right?
Well, I'm really curious, like in that scenario, like what recourse would the payer have? Like, are they just like out the money? Like, there's no way to go after
Yeah,
the
they're out.
fraudsters?
They're out that money. Sometimes there's insurance. There's not always insurance. But what is better in this situation, for the municipality or for the property manager, is prevention. If somebody calls me up and says, I've changed my routing and account number, I say, that's great. Let me call you back on the number that I have on file. Let me communicate with you with a known communication method. That's a very simple policy and procedure, right? Business email compromise, which is another scheme that can happen, is where a fraudster will use either a compromised email from somebody high up, or they'll modify it. And typically it's modification, right? So instead of Marie Tepman emailing Brittany, it'll be maybe Maria. It looks very close, and maybe Brittany doesn't catch it. Or they'll change that I to an L, or they'll change something in the email address to make it really look like you. It typically will go to somebody that's high up in the company, or looks like it's from somebody high up in the company with an urgency. We'll say, I'm at this conference, thank you for staying back, but I need this bill paid right now. You have the authority to do that. Go ahead and submit an invoice to accounts payable, and then it gets paid out. And that fraudster used email to pretend to be somebody with authority, and that employee didn't check, and that employee may not work there anymore after that, right? It really is terrible that they're doing that kind of thing. But we, as employers, as companies, need to make sure that our employees are educated that, hey, the CEO is not going to reach out to you and ask that you pay this invoice. We need to say, look at your emails. There are lots of tools that can be offered out there on education. You can look at Nacha.org, and we've got a lot of the schemes documented, some prevention procedures and good things written on our website. If you go to Nacha.org and look at RMAC, for example, we've got some things that you can do, some ways that you can react, some policies and guidelines out there for pretty much everybody from the ODFI to the RDFI to those originators and businesses.
Mhm. Yeah, I was speaking of, like different ways fraudsters can kind of like trick you into thinking that you're making a legit payment. Like I saw a story from a real life property management, business owner that their company lost, I think, I can't remember if it was like 40 or 60K. Someone apparently hacked into their payment system and did the thing you were describing, created like fake invoices for legit vendors that were in the system. And then they like knew the schedule, the payments looked like normal. And so they paid them, and they only found out, I think when like the actual vendors followed up, like, hey, we haven't gotten payment
paid yet.
Yeah, and that's when they discovered that apparently someone was able to hack into their payment processor by logging into an inactive user's account. They somehow were able to do that, and it's really scary.
Like do a password reset or something.
Probably,
somehow.
And it was like an email. It was an inactive user, so the employee probably doesn't work there anymore, and so no one like checks that inbox anymore. And
that's what we call account takeover. So that's a different scheme. If you look up account takeover fraud, there are a number of different vectors to get into an account, and your security should be paramount, right? Once an employee leaves, you turn off access. There shouldn't be an idle employee. Dual controls is also very important. If you've got even a small company, you should have, if it's just the two of you, with a CEO, right, and you two are in accounting, Marie should not be able to create an invoice and pay an account over a certain amount of money. It should take collusion to make that happen. And what are the chances that both Marie and Brittany are going to do that? Fairly low. So having dual controls over your payment systems is very important, even if you're a small company. I was talking to somebody in a different business, in a small company, whose employee did that to them, right? They didn't have dual control set up, and their employee paid out money to somebody that benefited them. And
Wow.
they're unfortunately out of luck because they allowed that person to be an authorized person to create those payments, and they've got to go through the courts and get that money back. It's not necessarily through the payments network. And in many of these payment schemes, it doesn't really matter if it's ACH, right? The fraudster, they convince you to push a payment. If they convince you to write a check, to send a wire, an ACH push, it doesn't really matter. They will accept that payment however you're willing to give them money. So the property managers that are listening, think about how you're setting your controls up. Don't have different controls on different forms of payment. If you've got a control that says Maria is able to set up a $10,000 ACH, why would you let her use up to $100,000 wire? Or why would you let a check go out on a single signature if it normally requires Marie and Brittany to sign that? Put those controls the same across all your payment methods.
Yeah, I mean, I used to work for a bank, and like even for wire fraud, it's like two business partners, dual controls, and then right before sending the wire, the business partner says, gets a text that, hey, I made a typo, just change this one number in the routing information, and it went to the wrong account. And it was apparently fraud. Like the phone number was spoofed, and it's really scary how easily these things can happen. What would have been better was, after getting the text, calling the business partner, like, hey, did you send me this text? But they were like, oh, we need to send the wire out. Like, oh, there's a typo. Okay,
There's
typo.
always a
change
sense
it.
of urgency.
Right.
Yeah, and then
Always.
good for me, I triple checked. I'm like, are you sure you want to send it to this amended number? And so unfortunately it was on them. But and so kind of like, fraudsters are always going to find a way to defraud people of money. And so what makes a business easy to become prey to this? Like, what do fraudsters typically look out for to identify the low-hanging fruits? Is
They're
that
gonna look
something that
for anything, right? They're going to look for businesses that don't have good controls. They're going to look for businesses that are, not paying attention. So it's so important that you have, even as a business, your policies and procedures written down. They're going to look for CEOs going on vacation. They're going to look for things that are out of the ordinary. And again, with that sense of urgency, there's always going to be an emergency why you need to make this payment right now. And you don't.
Yeah.
There should be a little bit of friction when you're making some of these payments. If you're ever given an urgent order, that would raise red flags for me as an employee.
Yeah, that's a good one. I think,
right?
yeah.
Because fraudsters are
true.
coming after us too.
And so, like you were saying, prevention is better than cure. But if, let's say, a property management business owner finds themselves victim to fraud, what can they do? Do they just not have anything they can do? Just like
No,
try to move on?
Not that hopeless. It's not that hopeless.
Okay.
We're working right now to help the industry recover from fraud events. It's not always a total loss. Work with your financial institution. Now, I will give you a sense of urgency here. The faster you respond to a fraud event, the more likely you are to recover. If you have got other things to do and you sit on your hands and you wait, you are much less likely to recover. That fraudsters are working as quickly as they can. As soon as they get that money into their account, they're probably going to transport somewhere else or potentially even out of the country. So if it's gone, if it leaves the country after a couple days, your chances of freezing that account and getting some money back are very low. So businesses, individuals who, whenever fraud happens, immediately work with your bank. Try and get that money back. And there are tools that they have. They can reach out to the other financial institution. They can work together in instances of fraud.
As you're talking about, like all these types of fraud, a scenario came to mind. I've been hearing the scenario where, residents are, paying their rent for an extended amount of time, like 6 months, a year. And then when they leave, they like dispute the charges with their bank. And I think like depending on the institution, some tend to favor like the depositor versus a business. But I know it can be more common with credit cards, but can you like dispute ACH payments? Like, can that happen for ACH?
You can. A renter can dispute ACH payments. And many of the networks in the United States, including the ACH network, are very consumer friendly. And, we don't want to encourage renters to use it incorrectly like that. But if a renter claims it was unauthorized, that you debited them and you shouldn't have debited them, then unfortunately that renter or that individual who makes that claim often wins out. And in low value cases, oftentimes the financial institution or the merchant on the other side doesn't go after it. But in cases of rent, that is large enough to take somebody to court. You do have to go outside the ACH network to get your money back and to fight that claim. That is unfortunately something that happens, right? That's not, I wish there was a better way to stop consumer fraud, but the rules are there to protect the network as a whole. And as a whole, there is a very low rate of that, but it does happen. And it is fraud. Those people, especially over certain dollar limits, you can go to the police. There are repercussions, just not on the ACH network, if that makes sense.
Yeah. And so it's either somebody at it's like nobody at the financial institution is kind of digging into it. They're either saying, yes, we accept your claim, or is that kind of what happens? And then they have to take it to court? The way the
rules are written, if they say it is unauthorized, they have to sign a statement. And the statement is very strongly worded that this is an unauthorized transaction. And they're willing to sign that, and their bank has to send it back as unauthorized. So it is fraud. If they know that was an authorized
they're signing off on fraud. That's what they're doing. And that's your evidence.
Sure, but it is fraud, right? That's something, I don't know how you make a rule that you can't commit fraud. There's already plenty of laws against that, right? We can do our best with RIN statements at that receiving financial institution, but the rules are going to be consumer friendly to protect those consumers from unscrupulous originators. And so we had the rules are weighed with everything in mind, with all the different parties in mind, and for the most part, that doesn't happen. I'm not going to say it never happens, but it is not common.
So are the rules set up that way, that wherein it's more friendly to consumers because there are more bad actors on the originator side? Is that why the rules are that way?
I would say that. Yeah, there were, a long time ago, some of the previous frameworks have helped get rid of these guys, but you had people that would get routing and account numbers, and they would debit, especially old people, $29.99 a month. Looks like a legitimate thing. And eventually people would say, that's not mine, and dispute it, but it was almost a cost of doing business. And so you can't have those high unauthorized rates. If that landlord is getting a bunch of tenants that are saying that it's unauthorized, that's also going to look bad on that landlord. So they need to figure out how we can resolve that situation. Now, I don't know that property management or landlords have ever come up on our radar for that type of thing. It's generally other sectors, but it's something that any originator needs to be mindful of, is making sure that they are not incorrectly debiting consumers.
I guess my takeaway here is no payment method is kind of like immune to fraud or to risk. And so given the risk associated with like online payments, what would you say to our listeners who kind of got spooked with all the fraud talk that we were going over earlier?
Spooked by the fraud talk? Well, fraud is not necessarily tied to a payment method, right? Especially your credit push fraud. That fraudster will take any type of payment you're willing to give them. Your online methods, I would say, are much more secure than cash or a check. When you've got that physical movement of funds, a physical cash or a physical check that is out there and shows your routing and account number on a check, or it's actual cash. There's no recouping actual cash if it gets stolen, unless you go to the police and you find a guy with a big money bag. Right? Cash is not secure. Check fraud is very much on the rise. Your electronic payment methods statistically are much, much safer, and you're able to control that information much, much more. There are rules on keeping that data secure, and there are just simply less opportunities for it to be intercepted. If it's a check, it's going to go into a mailbox, or you've got to physically walk it into the post office, which they're saying is the only secure way now, and that being the postal inspectors. They tell you, if you've got a check, don't put it in the blue boxes, don't put it in your mailbox with the flags up, because that's what the fraudsters are looking for. Take it physically into a branch. And that's, who's got time for that, right? So electronic really is the way to go, whether it's a wire or ACH or credit cards or any of the new platforms. Those are protected. Use all of your authentication methods. Don't just use a password and an email address. If you are offered a token, use that. Use dual controls. Use your security methods, and you'll be fine. Or at least you'll be better.
Right, and so
using checks or paper cash.
Yeah. And so if we have listeners who may have questions about ACH, or maybe have been experiencing an uptick of fraud and want to maybe report it to Nacha, how would they be able to reach out to you and your team?
So I can be reached at jbennett@nacha.org. Send me an email, and I usually respond quite quickly. If you have a specific fraud incident, report that to your bank. That doesn't necessarily need to go back to us. We can't get in the middle there, but we do like to know how these things are resolved. Sometimes if you've got a success story, give me a call. But again, with any fraud, immediately contact your financial institution. They're the ones that can help you.
All right. Thank you so much, Jordan.
Thanks, Jordan.
Thank you. Always enjoyable talking to ACH.
And that's all we have for this episode of the Property Management Show, brought to you by 4.5 Marketing Agency. Since 2012, 4.5 has helped hundreds of property managers get more owner leads through digital marketing. Whether you need help with your website, your SEO, online reputation, video and text content, social media, marketing plans, paid advertising online like pay-per-click, you name it, we can help you. Visit our website, fourandhalf.com, to learn more. That's fourandhalf.com. If you have any questions, guest suggestions, or feedback, go ahead and send us a message. marketing@fourandhalf.com. That's marketing@fourandhalf.com. And if you are enjoying our show, please show us some love by dropping a rating or review on your favorite podcast app. Thank you as usual, and see you next time.